Alright guys, I'm just gonna talk about a couple of stuff first. Um, I know a couple of people still don't know what hard bid stop is. So usually when you sell, right, you sell at this price, and you buy at this price. So when you sell and you put your targets, right, once the price hits your target, you're buying, right? So you're gonna get this price down here, the ask price, right? When you're selling, so again, when you're selling at the bid, and your stop and targets gets executed at the bid, at the ask, right? At the offers. When you buy at the offers, your stop and targets gets executed at the bids. So hard bid stop means when you sell, right? When you sell, you want to sell at the bid, and both your targets and your stop will get executed at the bids as well. When the bid price is your stop, you should be out of the market. Same thing with the ask price. When you buy, you want to buy at this price, and your stop, you want to be stopped out whenever this price hits your stop. So 100% of MT4 brokers, they don't have this feature. So what you need to do to use hard bid stop is add the spread to your stop, right? Or you can, just add 1.5 pip to your stop. Make sure the broker doesn't do funny business. So what happens is, most times, that as soon as you reach your target, like, let me just open up a chart. I don't use charts, but let me just show you what I mean. Alrighty. Today, we were short right at 60. Do you see the candle is like a little bit, the high, it's above the 60? If I open the data window, the high is what? Oh, the high is at 1463, right? So you usually have about 0.6 to 0. pip spread. So for you to be taken out of this trade, since you were going short, right? So as soon as your ask price, which is this, hits 60, you're out of the trade. So the highest event, it was 63, right? So as soon as your ask price gets to 63, you're out of the market. But that's wrong. The bid price has to be 63 and above for you to be taken out of the market. That's called hard bid stop, right? So if you call your brokers, I would say if they're using MT4, 99% 8% of your brokers, they don't even know what the hell is hard bid stop, right? So if you ask them, do you offer hard bid stop, they don't even know what you're talking about. And another thing is, with MT4 you don't have the ability to place your trade inside the spread, right? So you don't have the ability to place your trade inside the spread. But on other platforms you can, but in the start, you don't need to be pro. You don't need to have a pro account, right? To be able to do stuff like this. Just simply add stop, add spread to your stop. I would say, since most of the stops are variable, add 1.5 to your stop all the time, right? Not to your target, but to your stop. So you've seen many times, we place a trade, it hits our stop right to the pip, right? Like exactly to the pip, and you'll see how so many people, they're out of the trade with a loss, right? And like example, like today, we sold at 50, trade went against us by 10 pips exactly, and turned around and hit the target, all the targets. So that costs you money, right? So you're gonna make sure what type of broker you use. They should be reliable, and if they do funny business, then it's hard to make money, because your subs is gonna get hit left and right. So tell me uh, how you can make money if your broker is a deal desk. Because if you know this, many times the chart of your broker is different from another broker. That's why, because they do funny business. So that's one thing. The other thing, someone said today, I think it was Cameron, he said he is seeing large order buying euros, right? So if you see someone says, first of all, you have to verify that the information that anybody gets are valid, right? So not just anybody comes to the room. We have about like 160 people right now. You can't just trust any type of information unless they proved their signal, right? They proved their order flow. I mean, proving their order flow means if someone truly using order flow to trade the market, right, they should have a pretty good advantage over everybody else that using fundamentals and technical trading, right? So if you want to find out that those people are legit, and when they call bids and ask, you want to use those numbers to trade yourself, basically follow big institutions. um, Institutions, they can be wrong too, right? Not all the time they're right, but majority of the trades should go towards the target within 1 or 2 pip drawdowns, right? So not majority, but like over at least 10 to 15% of the trades. So I don't know, you guys tell me, how many times have you guys seen I place a trade with 0 pip drawdown? Like what percentage of times have you guys seen that happen trading with me? Just give me your honest opinion. right? Thank you, Sakib. Um, so um, I'm just going to show this pretty quick so people see, what the answer was, right? So I have tested my methodology, and over 12% to, it's 12 to 15% of the trades with zero drawdown. Meaning I can follow big institution hedge funds and financial institutions. That means I can see their orders. I can figure out if majority of them or what majority of them are thinking, then I'll take a position myself, right? Maybe they can be wrong. Like, you've seen it also many times that I mentioned that if the trade goes against me by 5 pips, I know I'm wrong, right? I know I picked the wrong side of the market, but I'll give it another 5 pip tolerance for the market to play out. Maybe, there was something that I didn't see while I was looking at the order flow. That's why I would like to, let it play out. And once it hits 10 pip, then I know I was wrong, right? I was 100% wrong. But, with 5 pip, I'm still not too sure because what happens next, which I'm going to explain, is sometimes big orders, they have exactly opposite effect in the market. So talking about this, we were at about 14, 15 that someone in the room said, they're seeing big orders buying euros, right? So what does it mean, someone buying lots of euros? So let's just say I have $50 million right now to invest, right? So I'll decide the euro is going to go up. I call my broker or a bank. Usually they call banks because, broker, no way in hell they can fill $50 million worth of currency for you in one shot, right? There is no way in hell that any single broker can do that for you. So what happens is I call my bank. I say I want to buy $50 million worth of euros without leverage. That means about $5 billion, right? So what happens is if the order is big enough, I call my bank, order sits on a trader's desk, right? 80% of the job of bank traders is to just fill, client's order. Most people think that, banks are trading against you all the time. You're wrong. 80% of the time, they're just trying to fill your order because they're making commission, right? So 80% of the bank's business is based on commission. The other 20%, so let's just say, I'll buy $50 million worth of euro. Bank has to go take the other side of my trade, right? Since they're providing liquidity for every single person, even brokers. So if the bank rejects it, another bank picks it up. So at the end of the day, they are forced to fill my order, and they're gonna go, like, let's say I want to buy, they go short. I want to go short, they buy it. So they have no other choice, and they're gonna be left with that bad position, right? So if the client, buys, the price drops like this, bank is making more money, right? Not even is making more money. You made commission for doing nothing, right? Banks are basically doing nothing, and making commissions. Because they're making the markets, right? So don't forget that. So the client is buying 50 million, let's just say at 20. That causes this big drop, right, that you see in the market. Because the $50 million one click, if anybody does it, everybody else know that the market, they're not going to get filled at $50 million one click, because you can see there is only 1 million available here, half a million, 10, 11. So by the time they get filled almost, like, let's just say half a pip to 1 pip lower, right, on the smaller orders. But 50 million, I wouldn't say that much, but 100 million for sure could cause something like this big drop in the price, because the person sitting at the desk, they're gonna go in the market and keep clicking all these 4 million, 3 millions that are available for liquidity, right? So 65.5, 3 million, I click it, 3 million, I click it, another 3 million. So I try to execute my client's trade at the best trade price possible, right? What will happen is it will push the price down. So what I used to do before, every time that I would see, a big order hits my desk, what I used to do was, just open up my own account. I always had my laptop or, had some kind of an access to my own account. So whenever I used to see these big orders, what I used to do is I would buy for my client and go short myself, knowing that with this much volume, most likely at least I'm going to push the price down 2 to 3 pips, right? And then once the order is filled, other people, they're going to join him, because they're joining him once they can see order execution, and they're going to start pushing the price up. But in this case, I don't think there was a $50 million trade or anything of that amount, because it pushed the price down and kept going down right after. No, if you're buying at market, don't, no, you got me wrong. So I want to buy, right? When I have a $50 million trade, I'm not going to come here and click buy, buy, buy at market. I place limit orders here, offering other people to buy it from me. Do you understand what I'm saying? Because you have to think about it this way. You have to think about it from the market maker point of view. Me and you, we're retail traders. We're buying, right? Buying, we're clicking the offers. That means these prices. So the goal of a market maker, when you see here, is they want to go short. They're thinking short. So who's better than me and you? If we click on the offers, we'll buy from them, right? The goal of market maker down here is to buy, like they want the price to go up. So if I want to buy big lots, I never would click down here, just buy at market. There's different type of orders that you can place. You can do limit, buy and sell, limit good till close, stop loss. You can peg it. You can time slice it. you can use painless, which is easier, but you can use, like, let's say, like for example, I want to buy 10 million, right? First of all, I click partial fills because I know I'm not going to get filled on 10 million one click, right? I showed you on my account. I bought like 200 lots, right? And 200 lots got executed in, I can show you, like, I don't know if you guys still have this screenshot that I sent you a while ago. So let me see if I can find these screenshots. Yeah. Here, I'll show you my live account screenshot. Basically, I have done one trade on the yen, right? I can, if you guys want, I can send you the detail of all my trades for the day. What happened was I went short initially, 44, my average was 47, right? I clicked on 50, but not enough volume was available for me, so I kept, getting the worst price, right? So the average fill on the 200 was 47.5. And take a look at here. It says done trades. So basically I placed about today like 400 lots, right? 400 lots equals to 138 different trades. That means if I wanted to buy or sell at the market, it would be 3 trades. That's it. But that 3 trades that I placed took 138 different trades. So my order was getting filled from, with different liquidity providers. That's what it means. Yeah, I'm not saying, buying at the market. I'm saying, when I say buying at the market, guys, there is 2 ways that you can buy at the market. You can click on the market and you can place a limit that becomes a market, right? There are different type of orders. You can place a limit that you want whenever the price reaches half a pip on either side, it becomes market. So I can actually, if I want to buy at market, the definition that is different from mine, but in reality, I can click any of these numbers down here. I get filled at market. That's what it's called. Let me just take a quick screenshot to tell you what I mean so you can follow. So, do you see this? I want to buy myself, right? If I want to buy right now, I get this price, which is bad. I don't want that. I want this. So what I do is I see someone is buying, they want to buy at 54.6, so someone has to sell it to them, right? I don't care, I'm buying. So I place my limit order, 54.6. I want to buy another million, so it shows up here. It will be 2, right? Like, let's say this was 2 million. I put another 3 million on top of it. It shows up here. Someone picks it up. And when they pick it up, I'm in at market. Right? I get the best fills. I know for the fact that if I want to buy, right, I place my order here. Someone, buys it from me. So they sell it to me. Do you get my point? Or it could be confusing for you guys in the beginning. I understand. Some of these concepts could, take a good month to 2 months for you to get the exact concept. It's not something easy that anybody can do, but once you get it, it would be so easy that, you're going to be laughing at it. You can put the charts on the side, no charts, but this. Just look at this and make money. So it takes time for people to understand that everybody has different concepts, right? Regarding order flow, but I would challenge them. If they think they can make money, I'll give them $5,000 on my own account or 10,000 to trade my account, right? Let's see how many of these people they're gonna step up and say, okay, I'll do it. I'm joining many different rooms every day, and I haven't seen a single person. They're good. It looks good when they call trades, right? Don't get me wrong. But if I ask them, would you be able to trade my funds? I'll give you good money. What do you think they say? I have not found a single person to accept it. I used to do like managed funds long time ago. I had good days, bad days. I had days that I lost money. Actually, one of someone, I think he's a member of this room. He doesn't tell me who he is. So one day he sent me something from back in 2008, 2007. Those were the times that I was using just pure technical analysis, and I was making money and losing money at the same time. Some years, getting break even, some years just, at a loss, some months at a loss. So I think I was managing that person's account and I lost some money, and I have nothing to hide. So I'm just telling you, I had bad days. I had very good days. And, when I call trades, I post it in the room. Even though that you can't see my account, I'll post my account, the screenshots from time to time. You guys can follow to see if I'm making money or losing money, right? So that's not the important part. The important part is for me to be able to find a couple of reliable traders, to be able to train them myself, since I want to retire soon, so they can trade and manage my funds. What do you mean? Why would that drive the market down? Yeah, Exactly. Some large buy orders can drive the price down. Exactly. Because as I'm saying, I don't know if you followed me or not, but the thing is, let me just capture this one more time. I freeze it. Let's say I want to buy 50 million, right? I want to buy 200 million right now. What do you think is going to happen? Can you answer me this question? Yes, I'm recording. I will upload it by the end of today, this one for sure. So if I want to buy 200 million, price will drop because there's enough liquidity to fill my order. I don't know if you can follow, Enrico. Like, I want to buy 200 million, so I can get 2 million here, 7 million at this price, 23 and a half at this, 22 at this, 26 at this, 8 and 5 at this, right? So I'm pushing the price down. To get filled. So that's why they say, you know, if you have a big order, you get worse fill, right? Because if I want to buy and I want the price to go up. So if I buy at 52, like let's say 10 million, let's say 50 million. My average entry is 49, not 52. So I'm pushing the price down, right? I get better fills sometimes I get bad fills. So instead of, since I'm buying, right, I may get filled at 55.9 instead of getting filled at 54.5. Well, there is no assuming, you know, I can see what's available, I can hit it. Well, this is the game. This is the game because that's why you see, you know, this changing all the time. Right? And high frequency trade is all about this, which whenever we have more time, I will touch on that. So if I'm buying, you know, big volume, instead of pushing the price up, I'll push it down, right? So I go negative a little bit before the price starts heading back up. Alright guys, that's it for today. And I will catch you guys later. I will be done for the day. I have so many other things that I have to do. Sorry about that, guys, but I'll see you guys on Sunday.